Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. And this is your crypto recap, where I cover some of the things that are going on in the crypto space. So let's jump into it. Okay, so here we are on the cycle chart, which I guess when we are at all-time highs becomes a lot less relevant than it's kind of ever been. Essentially, because when you are in price discovery, you can't really look at what happened in the past, essentially, unless you're looking at fractal patterns and stuff like that. Or looking at Fibonacci extensions, you know, so I've got like the last cycle measured out, the 1.618, which it actually hit the 1.618 in the last cycle. So the 1.618 was the first peak of the previous cycle. So see here, 1.618. So you can see that's measured from the previous cycle there, which was 62K. We actually went a little bit above that, up to 60, just under 69K, as sure we're all aware, because that was the target to break this cycle, so far at least. And we tagged that the other day, obviously, as I'm sure we are all by now familiar with. Now, the 1.618 at the moment for this cycle, so that's measuring from the top here to the bottom of the bear, is at 162K. And that doesn't sound too crazy given the flows. So we're kind of looking at the moment. I've got a Elliott wave theory potential path. Again, I'm not banking on this, as I said in the last video. So, you know, I've just put like a pullback area here, and that would be the bottom of the bands, but as a potential sell the news after the halving, as we did in not the previous cycle, but the cycle prior. So 2015, 16, 17, we pumped into the halving, corrected just after into the bottom of the bands, which is about 50K at the moment, and then resumed on to do crazy moves, at least in 2017. And that's kind of what I'm comparing to now, because we have access to all this new liquidity that we didn't have before. So that's your 2017 pump. Looks crazy, doesn't it? I think it'd be more mature like the last cycle in terms of price movement, was in, you know, like more of a trickle than something like this. But I mean, because that was when Bitcoin was worth like 4,000, 1,700. Imagine buying back then. But anyway, let's have a look at some of the other metrics. So open interest hasn't spiked back up. So, I mean, that's a good sign. So we haven't had people going crazy long again, I suppose. Unfortunately for these people, they were liquidated, or their positions were forced closed, or something to that effect. When we had that big dump off there, we haven't had an aggressive move back up to that level. So I don't think we will see any crazy volatility just yet, as their open interest slowly picks back up. Having a look at the funding rate, things are getting positive again. So we're getting back to pretty high levels on some of these altcoins. You can see over on the side there, on the left-hand side of the heat map here, and then each one of these dots is for each coin. So you can see that, you know, that was where we had that big flush out, and then this is where things could start to come back up again. Have a look at the funding rate though on PEPE. That just hasn't really dropped. Even after we got the flush, PEPE has still remained really high on the funding. So people are paying a lot of money who have long positions open on PEPE. And that includes me, because yes, I do have a position open on PEPE, but I'll cover that at the end of the video. And that is a bot, and it's up about 4,000%. Between 3,000 and 4,000%, just goes to show just how crazy the swings are on coins like PEPE. But anyway, I think Bitcoin's probably going to start consolidating here until we get some of these major flows. You know, we've got probably the FTX estate selling Bitcoin, and so those are your outflows, GBTC outflows and all that sort of stuff, which will probably be the only reason why we would range up here. But anyway, so funding rates, at least for Bitcoin, is still okay, but the altcoins are starting to really pick up. So what do you got this here? Fetch. People are going pretty long on Fetch. We got Whiff, Dog with Hat. People are quite long on that too. So, you know, we're definitely picking back up. We just get rid of anything below 80% APR, which again that's really high. That's a really high funding rate. So that's for every 1 hour or 4 hours, or whatever the duration of time that funding is paid on any exchange, really, because even decentralized exchanges pay funding. Essentially, when this is red, or close to red, I should say, because no red here, it's just dark orange, longs are paying shorts to be open, and that's because the price, to maintain the perpetual futures price to the peg, if you will, of the underlying asset, funding is there to try and prevent the price from slipping too far from the actual price of the asset. So if these huge positions are open, long for example, then they will be at a premium, as in the price of the perpetual futures contract will be at a premium or like above, at least in this case, the actual underlying assets price. So it's mainly really large positions that are causing this sort of differentiation between the two. So the whole reason why funding exists is to encourage very large positions that are most likely the reason why that depeg has occurred to either scale out or close their positions, which creates sell pressure, which brings the price back down to its peg, if you will. It's called an index price, but you know, people know the word peg, so we'll go with that. So in terms of the biggest bullish coins at the moment, people who are just willing to open up positions regardless of the premium, we're looking at Solana, we're looking at Chainlink, we're looking at PEPE, we're looking at Render. That makes sense. Rent has been going absolutely crazy lately. Say, okay, interesting, very interesting. I didn't expect that. And there's probably others as well, but you can see here it was just ridiculous. Like everything was just being over leveraged long. Prices were really starting to move away from the peg or the index. And this is where we had our pullback. So if we see anything else like this again, right? If we see anything else like this area here across all altcoins, right? Not just a few like we are now, then that's when we start to consider the fact that we might be getting a shakeout in the market again. So market makers will want their money back because that's what leverage is. As I said in the last video, leverage is just money that has been borrowed from the broker, aka the exchange, to open up larger positions than people actually have the money for. So anyway, I think we're okay right now. No, it doesn't look too crazy. So no, I don't think we'll expect any crazy volatility just now. But again, this is what to look for. You can go to coinglass.com, look at the funding rate heat map, and then you can just bring this up so you can get rid of all the green stuff and go from there. So, you know, in a bear market, you would be looking on the other side. If the funding is overwhelmingly negative, so that's shorts paying longs, then those are sort of your bottom signals. And then in a bull market, you know, these are your at least local top signals when you see this sort of stuff, right? So, and you can make it do weird pixel art if you want to. Anyway, so one of the other reasons why price for Bitcoin took a dive, and I briefly touched on this in my last video, but I didn't go into the details, is some dude who held Bitcoin for 14 years decided to sell, which was another reason why the price dumped. So we had over leveraged longs across all altcoins, and Bitcoin mined in 2010 that was dumped at the all-time high. Now, whoever did this, they're an absolute champ. I mean, if they had the conviction to mine Bitcoin back then and hold it until now, I mean, that's really, really impressive. Let's be honest. 2010. Let's have a look. Let's just say, you know, by the time we'll just go here. Bitcoin was worth 6 cents in 2010. I don't know how much Bitcoin was mined there. I can't even read how up this is. I mean, it's 14 years, so I mean, it's a decent amount of time. We're not going to see this again for Bitcoin anytime soon, but can you even see what that is? Is that 133 million %? 133 million %. Okay, I mean, you really can't blame this person for taking some profit on Bitcoin. They mined at 6 cents. That's insane. The lowest I ever bought Bitcoin was like, I think $7. And I just wish I held on to that. I did not, but because of all of the Mt. Gox stuff. So that's kind of when I paper-handed my Bitcoin and then started buying back in 16 and 17 properly. But this is very impressive and completely fair. I mean, come on. If someone has the conviction to get into something like Bitcoin back then, they deserve to take profit, let's be honest. But they would have a lot. I don't know if they sold everything, but we're essentially moving Bitcoin from old hands to new hands. And just a quick reminder, you know, and I briefly touched on this in my last video. And in my last video, we were still in the middle of the dump, or the correction, if you will. So, I mean, we've just sprung back up, essentially, up to the tops in Bitcoin anyway. So, I mean, we were down here at 36K roughly when I did the video. But I was just like, I mean, dips are for buying, and this is just a reminder here. So until we break structure on Bitcoin, there is no reason to sell your spot holdings. Maybe rotate some memes into picks and shovels, aka layer ones, Solana, Say, Sui, whatever, L2s, Arbitrum, you know, Mantle, Manta, whatever, you know, pick your poison. Ecosystem coins, Jupiter, Dith, Nasana, Radium, whatever. Again, pick your poison, and those are just Solana ecosystem coins. And you've got ones on Injective, Dojo, etc. I mean, all ecosystems have their own coins. But besides that, there's plenty of time to plan our proper exit. So this is just something to keep in mind. If you get these big dips, then it's good to have the conviction to buy them until we get a break of structure. And what do I mean by that? As in Bitcoin no longer puts in the classic higher high, higher low pattern, right? So what are we looking at here in terms of structure? Here's a low of the market, right? We have a high, we have a higher low to this. We have a higher high, we have a higher low to this. Okay, this is just a ranging structure, so this doesn't really mean anything. Because look, the bottom is the same, the top is the same, and then we break out of this, we have the next high. But anyway, that's what I mean by structure. So, I mean, this is bullish structure, simple as that. So we haven't broken structure yet, and I don't see any signs that we will anytime soon. As far as I'm concerned, this is right now at current pricing. If we close below 45K, that's when we've broken structure. But until that point, we're in bullish structure. So pullbacks, dips, corrections, whatever you want to call them, they're for buying. In my opinion, not financial advice. That's just how I'm playing it anyway. Also, another thing is I've got 7 top signals for Bitcoin. They will likely be thwarted by the flows. So downside conviction is way more shaky than it's ever been, at least for me. And what are those top signals for Bitcoin? Well, first off, the first top signal I got, I suppose, if you really want to see what I'm saying in terms of the top signals that I'm talking about, we have 2 pivot surge top signals in a row, which generally is a sign that we could come down. We had 2 in a row here, 3, 1, 2, 3. We got one that was a stop out, so clearly that wasn't accurate. But anyway, so we've got 2 top signals in a row using the pivot surge. That's the cumulative volume index. So it's a large shift in the delta. So we're moving, it's a sign of trend exhaustion generally, but as you can see, it doesn't always work. But you know, this is the last time we had 2 top signals. We had 3 here actually. And we did start a small correction, and that was in January. So we still had flows back then, which shows that it can still happen. And that was from that entry that was about 20%. Hey, I mentioned in the last video, the 20% pullbacks. So that's one, and that's on the 12-hour. And then we have a TDSS9, so it's time to mark top signal, which again was completely ignored there. Pulled an amazing bottom there, pulled a good top there. I mean, it was just printing top signals here as well, and those kind of meant very little in the grand scheme. I also have profit points on the PESA strategy. So those generally calculate potential reversal points. And then we have on the daily the pivot surge, putting in a top signal on this candle here. Also have the stochastic RSI, putting in a top as well, which again, these things don't always play out. But so we had a top signal here, then we went down a little bit. What was the correction there? That was about 18, that was about 20%, that one there. And then we had one here. We actually kind of went sideways here and then went up and then put in another one there. So again, that doesn't necessarily mean anything. Looking for a confluence here, but and probably the last one, I guess, would be the fact that we just tapped the all-time high. And I said in the last video, we took about a month to break out of the all-time high level last cycle, which could drag us out to April. So anyway, but again, I don't have super high conviction on these top signals right now because we are in a raging bull market. So these can all be thwarted. I mean, if this was last year, I would be a lot higher conviction that we're going to get a correction, but it's not last year, it's 2024. And even if we do get a correction, then, you know, again, dips up for buying, in my opinion. So anyway, that's pretty much what I mean by they'll likely get thwarted by the flows. So even when we experience downside on Bitcoin and other assets, you know, there's always something that's shining bright, right? There's always something that's doing well. And for me, at least yesterday, it was Fetch, Nia, when Guok and Asana in the last, and that was 24 hours. Yesterday morning, at least in my time zone. So this is the good thing about being in alts is that there's always a pump somewhere, right? So Fetch is AI play. I bought this a very long time ago at the start of last year, I believe. And Nia I've had since the last cycle. So I actually never took profit on that, and that's just been staking. And because the staking rewards for Nia are quite high, I've managed to accumulate a lot without spending a single cent. It's really nice. When I did buy back, and I'll cover that a little bit more details shortly, Guok is, I love Guok. They're doing a lot of really cool stuff. I'll cover more about some stuff that Guok are doing later in this video. And Nosana, which is again, very similar to Render, but I think you can also share additional resources for your computer. Again, another D-pin play. I guess the other thing to look at when you're considering what's going to be good in this bull run is the things that are making aggressive comebacks after aggressive pullbacks. So the things that bounce first are your narratives to watch. So what does this mean? watch AI, 100%. I mean, come on. AI is what it's all about right now in terms of narratives. L1 chains like Nia is great, and it bounced back very aggressively. So that's, again, a narrative to watch. Meme coins, I mean, come on, you got to watch memes. Even if you think they're too degen, that's fine. These aren't long-term investments, let's be honest. These are trades. It's especially something that I learned in the last market cycle, and I think a lot of other people did as well, is that meme coins are not an investment, they're a trade. So that's the other thing as well. And let me elaborate on that in just a second, but we got Guac, which is another one. These guys are actually kind of a meme, but also they're building some cool stuff. So I wouldn't call them 100% a meme coin. But again, Guac is, I like Guac. I mean, I bought it pretty low, so that's probably why I like it. But also, I don't know, I think they're doing some cool stuff. And Asana Deepin, so that's decentralized physical infrastructure networks. So stuff like that. And that's also AI as well, because this is lending out your compute power to other applications for them to use. So, and then you get paid for that. So anyway, that's just something to consider, is that, you know, when you get these big pullbacks, you want to see what bounces back the fastest. And just some perspective on the whole meme coin thesis. So this is my meme meta thesis for this market cycle. So I bought SafeMoon in the 2021 cycle, and it did 60,000%. I think it actually went up more than that, but at least when I took profit on it, it was 60,000%. I only put $1,000 into it, and well, I mean, you can do the math. That was an insane trade. It went up a lot more than that, and sort of, it's very easy to get sucked into the hypermania and the I'm never selling and all that sort of stuff. Just be careful of that, because, you know, that is what causes meme coins to drive up so high. So, you know, but it's fun though. I have to admit it's fun, but always make sure that, you know, if you're up an insane amount on a meme coin, that you bank the profit, because it's P&L, right? It's not profit until you take it. But I don't think meme coins can do what they did in the last cycle. So we also had the Ponzonomics of like things like SafeMoon, the reflections, which, you know, gave this promise of daily passive income and all this sort of stuff. And yeah, I mean, that was the case for some of these coins, is where if you bought it low enough and you had enough of it, you were getting all these reflections that we're calling it, which are starting to creep back into the meme coin meta now. But then also you had these crazy sales taxes. So SafeMoon case was like 11%. So there was all these things to convince people not to sell it. But also the other thing to consider is in 2021, we had the pandemic stimmy checks. So as in like the stimmy checks, as in people were getting free money. And also overall, in terms of the general economic outlook, is we had a quantitative easing environment. So that was just money flowing into the system, right? Now this cycle is a quantitative tightening cycle. So yes, the Fed are talking about starting to cut interest rates, but we're still in that higher for longer period. So no stimmy checks. So with quantitative tightening, there's less money around in the system. So in terms of liquidity, I mean, there's liquidity coming in from other countries too. I mean, you've got China entering the market and stuff like that. So it's not like America drives everything. But globally, economies are en masse in quantitative tightening. So will we get these crazy 300,000% gains again? Well, you know, it definitely could happen if you get into the right thing, for sure. But I don't think we'll see as many of them this time around. So the game for meme coins has become more of a trader's game, I suppose. But, you know, I could be wrong on that. It's still early, so we'll have to see. But I'm happy if I'm wrong. And why is that? Because I have a lot of meme coins. I didn't even ever want to discuss just how many meme coins I have in my portfolio, because it feels like it's too degen to be really covering on the channel. But yeah, maybe one day I'll show you my portfolio, but because it's really up to you what you degen into when it comes to memes. I do cover them though a fair bit on this channel, admittedly. Moving on, we have only 4 out of every 100 people in the world in crypto. I mean, that's nothing. So, I mean, we're all still pretty early, to be honest. And it just goes to show that kind of retail is coming back. Yes, but are they back in full force? I mean, let's have a look at Benjamin Cowen's new Twitter followers. So when you see these big spikes in new Twitter followers, those are peaks, right? So here's a TLDR. Simple read is spikes equals tops, barely any movement equals higher, right? Where are we right now? I mean, we're higher than we were in 2020. So there's definitely more engagement and more people around, but we're closer to where we were at the start of 2021. And so if we compare, that's probably exactly in the same place. That just makes sense. People see the all-time high being broken. They're like, oh, what's going on here? Like, have I missed the boat or whatever? And then they just buy higher and higher and higher. And then people like some of the OGs and Chads in the crypto space who have crazy conviction even after huge dumps. We've been here the whole time, enduring the chaos and insanity. But a lot of retail wait for all-time highs to come back in. We can see a tiny little spike here. And we had this same sort of thing happen the last time. And then that's when Bitcoin did what, like a 3x from where it was. So, I mean, you know, the way I read this is not the top just yet. I mean, look at this big spike here, definitely a top. This big spike here, that was when retail really came in, that second top. This is when altcoins were doing crazy moves to the upside, right? Solana was putting in all-time high. Memes, a lot of altcoins were putting in their all-time highs here. So when you see big spikes like this is your danger sign. Do we see another spike like this right now? Nope, I don't see any danger. Higher. Essentially, is all I'm going to say. Agree with Colin here. Apparently the bull run has barely even started. Now, so this is technically the Solana ecosystem update part, but this is actually multi-chain. So I'm going to go into the details now on the Wormhole or Portal airdrop. And if you have ever bridged assets between, say, Solana EVM chains, Injective, Osmosis, Terra Luna even, and I'll go into some more details on that one in a sec, but you may be eligible for this airdrop. So if you ever bridged assets on Wormhole, then you might be eligible for this airdrop. So here is the section of the video dedicated to this. So if you come over to airdrop.wormhole.com and you will find this link in the post on my X. I would say link in the description, but links aren't working on my videos, just so you know. So if you need any links for my videos, then just go over to my X and link in the description, even though you can't click it. And you'll find all of these posts on my X page with many, many other things and all the alpha that I share on a daily basis. So come over here to the airdrop checker. Again, it's not the claim, it's just the checker, but at least it gives you some idea as to what you're eligible for. This is what it looks like when you come over here. You can see they've got Discord availability as well. But here you can put in your EVM wallet, so connect to your MetaMask, for example. Solana, Sui, Aptos, Injective, Terra, Algorand, and Osmosis. So I actually used Algorand a little bit in the last cycle, but I'm not familiar with this Terra wallet, so I probably need to restore my key into this. So I should probably do that anyway, but nevertheless, it's very simple. You just come over here, click connect, and then allow it to connect to your wallet. Additionally, you can come to Sol, you can connect to Backpack, Phantom, or the Nightly wallet. So again, you just click connect. Although for Phantom, you actually can just check straight from your Phantom wallet. And the way you do that is you just click on your Phantom wallet, and you can see here, at least for me, I've got 3 wallets here that are eligible. So this one here is eligible for 2669. And the reason why that is because I was staking PEPE on this wallet. And the average allocation or the standard allocation is about 669. I'm guessing that's volume that you've generated through Wormhole. So that's the standard allocation. And you get some bonuses for things like Mad Lad's got like insanely high allocations with vesting though. But some of the NFT collections got crazy allocations. So again, like, I mean, I don't have any NFTs from decent collections, so I missed out on that, but I staked my PEPE, and so that was all good. But there's others as well. So if you've got the Martian wallet or Sui, again, if you're using the Sui wallet, then I recommend you restore your key into the Martian wallet to check, because if you've bridged over to the Sui ecosystem, then there's a good chance that you'll have an allocation for that. Aptos, again, Martian, same deal. Injective, you can connect your Kepler wallet for that. And Osmosis, same deal, Kepler, and Terra can only connect with Kepler as well. And so kind of my allocations were, I got, yeah, as you saw before, 4,008 from Solana. That's just Solana. And then this staking, I got 2,000 from staking, plus 3 wallets, 669 each. EVM I connected, and that was 669. Injective was 669. Osmosis, 669. Also, I found more in Terra. I've got to check Sui still, I think. I don't think I've actually checked that one yet. But yeah, at the moment, so far, I've got 6,600 roughly. And if the price is around $2.50, which is very speculative, that's about 15K at least on this one. So, I mean, that's kind of, that's a crazy amount of money, if you ask me. And this is not even including the Terra Luna one, which I didn't find at the point where I did this because I needed to figure out how to connect my Terra Station wallet. Now, if you've got a Terra Station wallet, let me go into a bit of help here for you to connect your Terra Station wallet in order to see if you're eligible for the airdrop. So if anyone used Terra Station, again, like if you use Anchor Protocol or anything like that on the Terra ecosystem, here is a bit of help to get you connected. I don't think I've ever had a tweet with so much engagement compared to this. I mean, this is actually crazy. I think there's a lot of people who wanted to check this, but when you try and connect to the airdrop checker and it'll keep trying to find the Kepler wallet. Now, here is how you can connect your Terra Station wallet. So that's the station wallet there, in order to figure out if you are eligible for the airdrop. So now, first off, if you have a Terra Station wallet, one thing you could do, and this is the normal thing you would normally do, is you would go into your Terra Station wallet. I've still got money in here. I mean, look at this. This is how much, look at that, at 2,051 I still have in USD. See, that's kind of sad, isn't it? And this is how much Luna I had, which was worth an insane amount of money at the time. So hey, I've got the old Terra PTSD, so you don't have to tell me about it. But anyway, so generally speaking, what you would do is you come up to your account and you'd go to export wallet, right? And what you would usually get here is a seed phrase. So I'm just going to blank this out because that's probably not smart to show. You would normally get a mnemonic phrase here, which is 12 words. But here you get a seed key, and it's like, well, what is this? Like, you could probably restore your seed key to another Terra Station wallet, but you can't use this in Kepler. Like, if you copy this and paste it into Kepler, it just doesn't work. When you're restoring, it just says it's invalid. So there's no mnemonic phrase, unfortunately. And so it's like, well, if I can't connect my Terra Station wallet because it just doesn't work, and I can't restore the seed phrase because it doesn't give it to me into Kepler, well, then what do I do, right? So that's what this is all about. So what you want to do is you want to come to manage extensions. So I don't know if you've got Google Chrome, will probably look a little different to this, but probably very similar. You'll come into here and you'll find your Kepler wallet, and you'll have to just turn it off. So it'll be like this. That's the reason why it's trying to connect with the Kepler wallet. So you just want to turn it off, disable it completely, right? And then come into your Terra Station wallet. And then when you go into the settings, so again, settings is this little cog here, and you tick this box here that says set station as default browser wallet, right? So you just click on that one here, and then it says here network. So the network will be mainnet, most likely by default. Again, mainnet, that's not helpful to us because that was post collapse, and you'll probably have some assets in there. I suppose mine's all being staked at the moment, which seems kind of pointless, but because I don't know who uses this network anymore. But anyway, you'll just come over to network and you'll come to Terra Classic to make sure that that's selected. And now that you have disabled Kepler and forced Terra to be the main wallet, you can just click connect and bang, there we go, just like that. So I actually was eligible for this 669 because when the Luna ecosystem was kind of collapsing, and even before that, I had a lot more sort of funds in Anchor Protocol. When price was going down, I was aggressively deploying more capital. I was just like, buy the dip, buy the dip. I was aggressively buying the dips on the way down. So thankfully, I was able to avoid losing a lot more than I did. But I mean, that's a nice little reward for some of us that got wrecked by Luna. But anyway, it probably doesn't really make up for it. But at the very least, if you're eligible for it, that's pretty nice, because at the time of recording, at least according to pre-market pricing, or if it's $2, then that's, you know, let's just say speculatively it's about $2 when it drops, which it may or may not be. We won't know until April, which is, I believe, when the drop is happening. That'll be about $1,200, $1,300, which is kind of nice. So at least it's a small amount to make up for all the craziness that went down. But if you didn't bridge out of Terra, again, they had their own built-in bridge, which now is, I think, TFM.com. I'm pretty sure it's either, it might be by the same team, I'm not really sure, but it looks like it. But if you use the Terra bridge, they used Wormhole. So if you were bridging to Solana like me, then you were using Wormhole back then. So there you go. That's how you get connected. And that's how, and basically what you would do after this is you would come in here on the day when you can claim, connect your wallet up, claim your funds, right? You'll have to make sure you have some Luna for gas and stuff as well, as in Luna Classic for gas as well. And then when you've claimed it, then I guess just go to Wormhole and bridge it out to a wallet that you actively manage, or an ecosystem that you actively manage. So if it's Solana, then you bridge your Wormhole to your W tokens over to the Solana network, or whatever it is. You'll get your options. You can choose whatever it is, wherever it is you want to send it, and that's where you can manage it. That's where you can sell it or do whatever it is that you want to do with it, depending on what we see in DeFi in terms of partnerships and stuff like that. I'm sure there's other things you'll be able to do with it, but that's essentially how you can check your allocation if you are a old Terra DeFi user. So let's talk price. Of course, this is another thing that people always want to talk about. So if you want to look at the current price for the W token, you can see it on a HyperLiquid, and it looks like people are pre-jeeting their W airdrop. So I think because this is perpetuals, people will be shorting at prices that they want to sell their airdrop at. So if you know your allocation, this is a common strategy, is that you sell it or you short your allocation where you want to sell it. So say you have 2000 W, then you would, on HyperLiquid, short 2000 W worth. And that's where you technically sell. And then when you get the airdrop, you claim it, and then you sell it and you repay that debt back. So that's what people are doing. They're pre-jeeting their airdrop. That's what I mean by that. I think potentially because too many people had ambitious price targets for Jupiter, as in there were a lot of people who were like, yeah, it's going to drop at like $1.20 or something like this, you know, it's going to be crazy. And or people were like, yeah, anything below $2 for Jupiter is fun. I'm like, I don't know, man. It's way better to sandbag your expectations, because if you think, oh, it's going to drop at 50 cents and it goes up to 70 cents, you're like, wow, that's great, amazing. Whereas if you think it's going to drop at $2, $3, $5, all these crazy price targets, and it drops at 70 cents, is what happened with Jupiter, then you're disappointed. And it's better not to be disappointed. So perhaps people are pre-jeeting due to this disappointment. And so maybe sentiment has shifted to people wanting to sell immediately. What will I do? Well, this is not financial advice. It's up to you what you do with yours. My allocation is quite high, so I have the ability to do this, but I'm probably going to sell half of it on the drop and keep half. So again, you do you with it. But if we come over to here, HyperLiquid, we can see we're getting a slight recovery. And based on your allocation, when you work it all out, so you work out across all the different chains and stuff like that, what your allocation is, and then you can pop it in here into HyperLiquid to work out what it's currently worth. So mine is currently worth 10,444, which is, I guess, pretty nice. And if we look at, you know, what happened with Jupiter and what happened with Jitto, is we were getting this sort of up and down. We were getting sort of pumps into and closer to the drop date. And so maybe we'll do that again, but we have broken structure. But again, this is pre-market, pre-launch pricing. So we'll definitely have to see what happens. If we get a lower high and things just start going down, it means that we can tell that sentiment has definitely shifted. So people pre-cheating, but maybe we get another push up to the all-time high. All-time high for pre-launch price is $2.50, which is what the price I mentioned before on X. So if you bridge to, say, near Kajira, for example, then the allocation will be given to you on the other side. So wherever you bridged your assets to, essentially, is where you will be eligible for on those. And you did have to have a minimum stake for Pyth. So there was allocations to Pyth holders as well as NFT holders and stuff as well. The relevant one to me, and maybe some of you out there, was the Pyth staking. So yes, you did get an allocation. For reference, my allocation, well, I had about 4,100 Pyth staked, and I had 2,000 from that. So I actually didn't know where the 2,000 came from. Like, why has this got so much extra in it? And that's why, because I was staking in that wallet. And you know, not all staking wallets are eligible. So, I mean, a lot of people are complaining about that, I suppose. But yeah, you probably needed a minimum of like 3,000 or 4,000 to be eligible for it. So it's becoming a bit more plutocratic, the whole staking or the airdrops, I guess, you know, because even we're seeing in the Cosmos ecosystem, some of these minimum requirements for staking are getting really high. Like Celestia, you need like 200-300 to stake to get airdrops for some things. And I'll cover one later on in the video, but unfortunately, sort of, it's not like Jupiter, for example, where you didn't really have to do that much, or even Jitto, where you didn't have to really do that much to get a really big allocation. Whereas with some of these newer ones, I think we'll find that as time goes on, the minimum stake requirements or minimum volume requirements will probably start to get higher and higher as more liquidity flows back into the space. So the golden age of airdrops, it might be sort of slowing down a bit. We might still get some good ones, but for the most part, Wormhole is an example of one where you still get a decent allocation for not doing much. But if you want a really big allocation, you have to do a lot more, I suppose. That's pretty much all we need to know, I think, at this point about the portal airdrop. And yeah, it'll be in a couple of months' time, so you can check your eligibility at the moment. But beyond that, there's not much more you can actually action with this. I mentioned the PEPE bot also at the start of the video, 4,257% from $50, $2,100. Absolutely silly, absolutely silly. Like, this stuff is just ludicrous. And as you can see, it's kind of come back to that point as well. What can you say, right? The memes are nothing to fade, right? The memes are nothing to fade. But yeah, Pepe's come back in a big, big way. And it's definitely beefed up my portfolio with some more money that I can throw at more bots for the most part. Or maybe I'll take some of this out and spend it overseas somewhere. Who knows? Let's see. So that's it for today's video. Hope you liked it. Hope you found it helpful. If you did, then please give the video a like. Subscribe to the channel if you want more content like this. Hit that bell notification if you want to be alerted when more videos come out from me. Go check me out on X, because that's where you'll find all of this alpha before I even do any videos on it. And I will see you on the next one. This is Kryptolytix signing out. Have a good one.